in the Asian markets first up. Largely mixed, so to say. We do have the Taiwanese index, which is absolutely flat.
Reliance Jio has launched a new 4G and internet phone called Jio Bharat Phone, which will be priced at $999.
The downside, the trailing reversal stop that you could sort of keep is roughly just under 19,000 actually, but rounded off that to 19,000.
The sequential growth of 30.8% is perhaps at a 7-quarter high.
For our markets, it's the Fin Nifty expiry, and the first tick on the Nifty pushes us closer to 19,400.
Income levels are still relatively low, and it needs to continue to go up. So there's a potentially lot of upside.
Go from the regulator, we got to go through NCLT, go to shareholder approval. But we believe all that will follow will get done hopefully in 9 to 12 months.
It was very clear that we would not leave the market, but come back with a much stronger partnership.
Management says that the order win provides a strong revenue visibility, and it also signals a strong start to the order inflow.
The Indian economy itself is growing at a fair clip, and bank with its extended reach now is able to pick up.
This time there is a faction of NCP, Eknath Shinde Shiv Sena and BJP. These three parties are governing the state.
Nifty, because there has been a big surge in last couple of minutes as well. So 97 points higher on the Nifty.
Why don't you fix the Kalipuri band? Well, that was the day so far, and it's been quite a day with lots of ups and downs. Not something that we are used to. Usually, it's been steady for the last 4 or 5 days. It's still quite okay. We are coming to you from the CNBC TV18 MotoCorp studios. I'm Prashant. With me, my colleagues Rima and Surabhi. Guys, hi. Good afternoon.
Good afternoon.
Hi, good afternoon, right? What a day.
Still green. And 19,400. I mean, visually, it was there for a bit at least, Prashant.
19,400, right? I mean,
19,400, yeah.
was the day's high. No, absolutely. I mean, actually, bulk of the... the reason I said there has been a little bit of volatility is because in the first 30 minutes, we got done with that, right? So the market opened, sold off. 10 a.m., we made the day's lowest point, which was 19,300, by the way, exactly 19,300. And from 10 a.m. all the way for the next many hours, all the way till about 1:30 or so, the market kept crawling higher, steady. And then we made the day's high. The opening level was another high. The high was made at about 1:30 or so, which was 19,434. So it's a wide range. I mean, 134 odd point range from 19,300 to 19,434. And then we've been selling off a little bit from the day's high, post 130, which basically is getting us to about 19,365. That's the live rate right now. PSU Banks are top gainers. Of course, the index was up 3% in the morning. It's up about, I think, 1.6, 1.7% the last I checked, even less now. So gains there have been cut in half from the day's high for the Nifty PSU, but that still makes it the top gainer. Sectorally, on the Bank Nifty, by the way, is outperforming what the Nifty is doing for the second straight session. It has been a bit of a slower mover as compared to the Nifty, slightly longer time frame. But it's got the Bajaj twins working for it. It's got HDFC Bank, SBI, ICICI Bank. So a mix of Bajaj twins and large banks. Mid-caps and small caps are underperforming a little bit. Mid-cap index is down. Small cap index is up, but not by very much. Yesterday, for example, the mid-caps were flat to slightly lower and small caps were still up very strongly. Both are a bit more subdued in today's session. Rima.
Just to take that point forward about how the Bajaj twins, the HDFC twins are contributing on the way up, pull up that contribution plate. The Nifty is currently up close to about 37 points as we speak. 33 points out of that is coming courtesy Bajaj Finance, and Bajaj Finance only has a 2.5% weightage on the Nifty, so you can imagine the kind of pull it's having with the up move. It's purely the stock price up move which is pushing it up. That's Bajaj Finance contributing 95% of the gains today. But the others too, HDFC Bank and ICICI Bank, and now IT is making its way to the contribution plate. Pull up the Nifty IT index and you would see in the last 1 hour, even as the markets have sold off, the IT stocks are seeing buying. The Nifty IT index is still virtually at the day's high, 0.7% up, and individual names like Tech Mahindra, TCS, which is why TCS is also making it to that contribution plate. When we talk about the PSU banking index, because the PSU banking index, as Prashant pointed out, is still the top sectoral gainer today with a rally of 1.6%. It's largely a catch-up which is taking place. So this week, the Nifty PSU banking index is up 5.5%, which compares with a 1.5% rally on the Nifty banking index. Despite this, on a year-to-date basis, it's the Nifty Bank, which is courtesy all your private sector banks, which has outperformed. So basically what you are seeing over the last 2 days is that the PSU banks are catching up compared to the, catching up with the rally that we've seen on the large cap private sector banks. And perhaps this is something which has just started.
Absolutely, yes. We've seen that over the last 2 sessions at least. Let's see if that can build into another trend. But the other aspect that we can't ignore is the fact that this profit taking in the mid-cap index, and it's very, very clear now because mid-cap index is actually down. It's not only flat, but it's down about 100 points as well. And we are looking at a small shave off taking place. In terms of some of the stocks where this profit taking is becoming a little more apparent because that index is pretty much at the lows of the session right now, where there's volume and price action on the way down. Yes, of course, you have IDFC First Bank, which is all news driven with the merger ratio out. But beyond that, there's L&T Finance, where there's a sell down. Remember the huge rally on expectations of management change, perhaps working well for the company? That was yesterday's story. Today, there's profit taking after that big rally. Nykaa is losing some ground. Ashok Leyland, ICICI Prudential Life. So some of the life insurers after the hectic rally there. Indian Hotels. And these are stocks that have done very well in the last few months. Indian Hotels is also one of those names where there's profit taking. That is quite apparent. But then on the other side, just to name some of these banks that Rima also alluded to, Tier 2 banking basically, IOB, Bank of India, Federal Bank, J&K Bank, a lot of these names, even PNB for that matter, PNB is up 6%. These are the names where the money is literally rushing in. So that's the shape of the market right now. 50 up on the Nifty, and we've got an hour of trade left. Let's take it up with Mitesh Thakkar then and figure out what the trading positions and bets should be like right now. Mitesh, good afternoon. So what's the call? Nifty, Bank Nifty, what's the trade?
Good afternoon, Subhi. We've been maintaining a target of 19,450 and we got a high of around 19,434. What we've done is that we've pruned and taken part profits on our stock positions as well as alongside exposure on the index and stocks. So very clearly, there's no sign of reversal as yet. But the only thing is that we are quite overbought on the intraday charts, which is the hourly and the 2-hourly charts. And therefore, the comfort to carry extra long position isn't there. I'm not sure whether we'll get a correction or not immediately. But in case we get a pullback to about levels of 19, 250, 270, and these are spot levels of the Nifty, then I think that will be a fresh entry point on the index as well as for stock. So for the time being, I think take some profits off, but try and trail the stop loss, see if the rally has legs to continue further. Though as we keep getting higher, we keep getting overbought. So that risk factor slightly increases. But for the time being, as I said, no sign of reversal and a 100-point decline would be a welcome buying opportunity. On the stock side, I have a buy on Tech Mahindra. That's a stock which has given a good breakout in the last hour. I recommend buying here with a stop at 11.30 for targets of 11.95. And AU Bank is the other one on my list. Would want to see the stock price get past today's high, that's the pivot, of 771. And once it does that, buy then with the stop at 760 for targets of 795.
Thank you, Mitesh, for that. Let's talk about the PSU Banking Index. In 2 days, it's rallied 5.5%. What's aiding the up move? Abhishek joins in with the details. Abhishek.
Well, if you take a look at the P&L performance of PSU banks have been largely in line with private banks on operational front in Q4. So Q4, the operating profit growth for PSU banks was about 2.85% on a sequential basis. And for private banks as well, it was at 2.9%. So part of the banking sector in Q4 was around 62,855 crore, up about 28.3% YOY and a decline of 4.5% sequentially. In this, the PSU banks actually reported a profit growth of 94% YOY and about 18.7% sequentially. Private banks had seen their profits decline by 11% YOY and about 24% quarter on quarter because it was impacted by the Axis Bank's results, which had a one-off cost with respect to the Citi acquisition that they had done. So X of Axis Bank, part of the private banks was at around 33,000 crore, which is up 24.3% YOY and about 10% sequentially. So in terms of outlook, in a rising interest rate scenario, what augurs well for PSU banks is that they have low credit to deposit ratio. We have seen the fortnight data coming from RBI. Loan growth continues to be healthy at around 15.5% to 16%. The deposit growth has also picked up, but deposits are coming in with a price. So just a guess is that the lower CD ratio augurs well for PSU banks with respect to the net interest margin, which can remain healthy or improve on a sequential basis. So while others will face heat in terms of cost of funds, especially the private banks, a lower CD ratio can actually aid in net interest margin remaining healthy for PSU banks, and valuation wise they are way cheaper than private banks by a far distance. Back to you.
Abhishek, thank you very much for that. Hormuz of the .com digital team has just told me that Bank of Baroda is trading at the highest level since August of 2015. We're looking at near 8-year highs now on Bank of Baroda. Deepan Mehta, director at Elixir Equities, is now with us. Deepan, stocks have rallied, but valuations of the PSU banks is still relatively cheaper than the private sector banks. Would you be a buyer in any PSU bank? State Bank of India comes on everyone's list. What about PSU banks other than that?
Yeah, good afternoon, Rima, and thank you for having me on your show. Yes, I think we are seeing a fabulous trading rally in the PSU stocks, which have been unabated. And even from these levels, I think next 6 to 12 months looks very positive for the PSU banks. We are seeing the process of re-rating of price to earnings multiple and price to book multiple also taking place. And I don't think that their costs in terms of NPA provisioning are going to go up in the next at least 3-4 quarters or so. So we have a nice trading rally. I think next 12 months look good for PSUs. But if you have a 3 to 5 year type of a view, then you cannot be not in stocks like HDFC Bank or Axis or ICICI for that matter. And we're very positive on IDFC First Bank as well. Disclosures of Vienna clients are invested. So medium term PSU banks look good. But on a longer term time frame, it's the private sector banks we favor.
Okay, since we're talking PSU banks, by the way, there are specific calls that have come in on BOB today, Bank of Baroda. Let's go back to Abhishek. Abhishek, run us through which are these views. I remember 2 brokerages wrote on BOB today.
Well, Surbhi, as you mentioned, there are brokerage notes that have come in on Bank of Baroda. One of them is DAM Capital. They have a buy recommendation and they have increased the target price to about 250 per share from earlier target price of 230 per share. They say that Bank of Baroda could actually outpace PSU banks in terms of peer competition with respect to ROAs, especially wherein they are expecting the ROA of BOB to be around 1.15% to 1.2% over FY24 to 25. This will benefit from a strong transition undertaken by the bank in last 3 to 5 years. There are 3 key pillars of transition. They say improving mix towards retail, especially the unsecured book, which can actually aid the net interest margin or the yield of the bank, and continue strengthening and formation of new verticals with investment being done in talents as well as lateral hiring. So around 20% of the loans as per them is based on MCLR rates, which will see repricing in H1 of FY24. This could actually boost the net interest margin or the yield of the bank. As a result, the bank is gaining traction with higher than industry business growth, benign asset quality and improved tech capabilities as well. We also have Citi who has written on Bank of Baroda with a buy recommendation. Target price has been raised to 245 from 220 that they had earlier. They say that the fee income has scaled up, 3.3% net interest margin and less than 1% credit cost will support ROA or return on asset of about 1%. They are confident that the bank can actually deliver with respect to credit growth anywhere between 14 to 15% YOY, or 1 or 2 percentage points higher than the industry average, and a net interest margin will be sustained at 3.3%. So the scale up of unsecured loans, focus on APF within the housing loans and broad-based growth in other retail segments will aid in 1.5 in terms of the growth, asset growth that they are forecasting. So focused initiatives, targeted segments that they have, and also being taken up to scale up the fee income is the focus of the bank, and that will help them in achieving the ROA. Back to you.
Okay, got that. Thanks very much, Abhishek, for all of the details out there. Well, Deepan is, of course, with us on the show. Deepan, we've spoken about some of the top gainers of the day, and they are from the financial services space. I want to talk to you about the top Nifty loser of the day, and that is Eicher Motors. Given everything that's going on, suddenly this premium end of the motorcycle category, it's all glitz and glamour here. So many new launches. What's your sense? I mean, there's Triumph from the Bajaj stable, and then there is obviously Harley Hero. Can the going really get tougher for Eicher? And how do you rank and rate all 3 stocks?
Yeah, so good afternoon. Yeah, I think it's a bit of a surprise to see Eicher being marked down so significantly. I think I just saw on your flash, I think it's a 8-year type of a loss, single day loss in Eicher Motors. Again, the disclosure, we and our clients are invested. See, I'm not too perturbed about the competition from time for Harley Davidson, for that matter, through Hero. Many other players and challengers have come, but they have not been able to make much of a dent to Eicher's market share. Of course, they've been chipping away at it, but the market also itself has been growing. And if you notice what is happening in Eicher is that the actual volume growth is coming from the sub 350cc bikes. And over there, I think the competition is still quite limited. I don't know whether Triumph and Hero Harley are in that segment right over there at the 350cc. But given the brand and given the kind of distribution network and the kind of aura these bikes have, they are like, lifestyle products more than bikes. I'm not too perturbed, and such corrections are good entry points into Eicher Motors on a longer term basis. Do keep in mind that it's the last company which will get disrupted by the EV revolution, where the likes of Bajaj Auto, Hero MotoCorp and TVS are going to see massive disruption next 2-3 years as the EV sales continue to grow at whatever 40-50% as against 8-9% type of volume growth for the regular traditional two-wheeler motorcycles.
So is Eicher on top of your pecking order then, Deepan? I mean, if you're talking two-wheelers, Bajaj, Hero, let's throw in TVS, is Eicher right at the top, and what would be, let's say, the next?
Yeah, absolutely. Disclosure that Eicher is the top pick and among the top 3 picks as far as autos are also concerned. The first, of course, being M&M, Maruti, and then Eicher we would rate it that way. But these are great levels, and you will see the performance of Eicher has been pretty decent last 2-3 quarters, and I'm very optimistic on the June quarter numbers as well. They have a large revenue flow coming in from a lot of accessory sales also which take place, and they haven't even scratched the surface when it comes to exports. So many positive factors going for Eicher, which is why we have a positive view on the stock.
Deepan, hi, afternoon. Talking of lifestyle, the other one is, the entire sort of alcoholic beverage space, right? You have Radico, which was up quite sharply. McDowell's has been a bit of an underperformer, but there are so many smaller companies, distilleries, etc., which have done well. Some of these bulk companies. Do you any views? You don't own anything in the space?
Yeah, see, very interestingly, the likes of McDowell have underperformed in terms of volume growth, price performance as well. And smaller players, as you mentioned, like say Global Spirits or Tilak Nangar or Radico Khaitan have done exceptionally well. And what I understand is that the alcobev industry is highly regulated at the state level, and managing the regulation, having the right distribution in place, getting the right price increases is the key to success. And I think the smaller players are better equipped and are better able to manage the regulatory regime than the likes of McDowell, which is why I think McDowell has lacked growth compared to these smaller players. I'm not completely sure of the valuations, but generally very positive on these 3-4 smaller breweries or alcobev companies. And these could be you could have a nice long-term secular growth momentum in these companies as well, because they are trying to move up the value chain by launching more and more premium products. And it's an industry which is, evergreen given the demographics in India. So rather than buying United Breweries or McDowell or United Spirits for that matter, I prefer the smaller alcobev companies.
Just wanted to point out, Prashant, Radico Khaitan, today's trigger obviously is the new gin that they have launched, and it's called Happiness in a Bottle. Just putting out some trivia for our viewers.
So that there is no doubt, right? Cause and effect.
Well, Street is excited. I mean, given what they've done with some of their whiskies, I think, taking Indian brands global, I guess the Street is a bit excited about Happiness in a Bottle.
Okay, I didn't know that, by the way, so thanks for that. Okay, we'll take a very quick commercial break here. Deepan is, of course, with us. And we'll also have our Alpha Manager of the Day, Anshul Sehgal of Kotak PMS, will be joining in on the other side to get more perspective, with talk more markets. Stay with us.
Welcome back. The Midcap Index is down 100 points. The advanced decline ratio is currently in favor of the losing side. So we've got about 3 stocks currently in the green for 4 in the red. Let's talk about Bajaj Finance, because that's still the biggest mover. No signs of profit booking there. Holding up smartly with a gain of 7%. Abhishek joins in with just to recap the quarterly update given by the company.
Well, the quarterly update of Bajaj Finance was pretty strong. Look at the new loans. That's grown by 34% YOY and about 30.8% sequentially. So sequentially, this 30.8% growth is at a 7-quarter high. The customer base has grown strongly as well, up about 21% YOY and about 5.6% quarter-on-quarter. The AUM growth on a YOY basis coming in at 32.4% is perhaps the best in last 14 quarters, and sequential growth of 9.2% in AUM is perhaps the best in last 16 quarters. So calculation shows that the average ticket size is up 9.4% YOY and about 3.4% sequentially. Deposit momentum for the company was really strong, growing at 46.3% YOY and about 11.8% sequentially. Liquidity in the balance sheet remains strong. Cash actually grew by 7.2% quarter-on-quarter. The cross-sell that's improved this time around, which was one of the factor impacting the loan growth. It's at 6-quarter high of 8.3%. So we have CLS's note on Bajaj Finance. They have upgraded the stock to buy from outperformance, and they have increased the target price to 9,000 from 6,600 that they had earlier. They say that the company is in a sweet spot given the fact that loan growth has beaten estimate and valuations offers upside. So their own estimate for Q1 loan growth was around 6 to 7% on a quarter-on-quarter, but the company has reported more than 9% in terms of sequential loan growth. So extraordinary growth for NBFC of this size. New customer acquisition was healthy. Disbursements growth is not led by ticket size given the fact that customer acquisition has remained strong. So they have raised their EPS estimate by 5 to 6%. PAT CAGR over the next 2 to 3 years, they see it around 25%, which could translate into ROE of anywhere between 23% to 24%. Back to you.
Okay, thank you very much for that. Dipan, Bajaj Finance catches your fancy at current levels?
Yeah, I'm speechless with the performance,
It's extraordinary for an NBFC of this size to grow 10% quarter-on-quarter, 30-35% year-on-year. It's absolutely extraordinary.
Please get them to your studio and ask them what are they doing right at getting this kind of growth rates at this level of competitive intensity and at this scale. I think it's absolutely amazing. And one of the unnoticed facts about Bajaj Finance is its ROE, which you just discussed, 23-24%. It's amongst the highest in the industry, well above any of the private sector banks. Of course, you can't compare, it's not apple to apple. And that is one of the reasons why the stock also trades at premium valuation. Not to mention that they have handled all the crisis which has come in the NBFC space, right from ILFS to the COVID crisis, pretty much without having major damage or hit on their NPAs. So I think they are doing something extraordinary over here. And as a shareholder of the Bajaj Finance, I'd just like to congratulate them for this phenomenal performance. And now looking forward to their first quarter numbers for FY24.
So you're clearly a shareholder. There is a disclaimer.
Yes, shareholder, investor, recommended to all our clients
Happy
as well.
shareholder. But would you buy it at current levels?
The thing is, it's a psychological, decision over here. So Bajaj Finance, you must have bought 10 years ago at that 140, 150 range, and then you got a lot of corporate action on that. Now to buy at 7,000 these prices is a bit of a mental challenge, I would say. But I think it's a great stock, and maybe not at these levels. You will find out corrections, maybe a good entry point as well. But at this point of time, just want to remain invested.
Okay, Deepan, we'll leave it there.
Happiness in a share.
You can't get the happiness in a bottle out of your head. All right. Thanks very much, Deepan. Appreciate it. Good speaking with you as always. Happiness all around. Well, let's welcome in Anshul Sehgal. He's head and executive vice president at Kotak PMS, and he's joining us right now to take some questions. And by the way, I think Anshul will share some of that happiness and optimism because he's someone who bought Bajaj Finance, and that too, at a very, very good price a few months ago. Anshul, talk to us about how happy you're feeling I mean, outstanding results, and of course, the stock performance is there for all to see.
Hi, Prashant. One of the things that one has learned over the years is that if you get good executors, good management, good executors, and good businesses, your money works very hard for you, and all you've got to do is just relax, put your legs on the table and relax in your room, sit on the chair, and the money will work hard for you. This is one such name which, has been working stupendously well. The management has executed, spotlessly over the last 10 to 15 years and compounded the way it has. But having said that, 3-4 months back, there was a shadow of doubt on competition, on how things were panning out in the business, etc., which is why the stock was trading at actually pre-COVID levels. So 3 years had passed, and the stock really had done nothing. The expectation from the street was that earnings will more or less double in 2 to 3 years. And that meant that this was probably the fastest growing Nifty stock in terms of earnings. And then while you have, while you talk of the scale, but you've got to see it in proportion. They're about 2.5 lakh crore in balance sheet size. And yet they're only 2% of the Indian overall credit system, a system which is growing at 15%. So if they keep taking market share, this is a very small scale in terms of the overall credit system in the country. Fast-growing company, high ROE, quality management, trading at tough valuations. At that time, it seemed like a heady combination, which had room for little downside and material upside. And we are a happy lot today. So we are rejoicing. Today's move has also what has happened in this name over the last few months.
So Anshul, you had very strong conviction to buy Bajaj Finance a couple of months ago when the stock price had fallen quite significantly. At current levels, do you have, the same kind of strong conviction for any other stock, or for which stock do you have that kind of conviction?
Rima, tell me if you like something. I'll go research it. This is a tough market. Everything's rallied a lot. It's not easy looking for names in this market. However, I'll tell you that, despite the rally, if you look at the pharma space, particularly the mid and small cap segment in the pharma space, that has really gone nowhere over the last 3 to 5 years, even longer, in fact. And in our judgment, that's where you can find opportunity at this time. Some of the names, they've added capacities. Those capacities are underutilized. You are seeing shortages of drugs in the US. Many of the existing suppliers to US, those are exiting the country because price competition is just so severe. And that means that there is no room for prices to go down, in particularly US, because it is the largest market for pharma. And if prices do go up with capacities underutilized, the operating leverage can be massive. And which is why we think that with valuations, again, over the last 3-5 years, even longer, having gone nowhere, and earnings being tough as well, this space looks quite interesting. Along with some financials. Financials also look interesting at this time.
Okay. So those are some of the sectors that Anshul is looking at. Anshul, good afternoon. I'm going to go back to the sector that Prashant was discussing just a while back with our previous guest, just because it makes for great conversation, right? And there's a fair amount of action there. Yes, I'm talking about Alco Beverages. We all started, discussing happiness in a bottle, which is today's trigger on Radico. But look at Sula as well, right? There's a story here, isn't it? Both Radico and Sula are up almost 30-35% in this calendar year itself. United Spirits and United Breweries, they've been underperformers. But there is a story, a premium consumption story in urban India that seems to be playing out. The question is whether you think it has legs to be a long-term story, and whether you like the price points currently. So what's the sense?
Hi, Survi. Yes, you're right. This is a space which is interesting, no doubt. Demographics work quite positively towards, if you want to build upsides in demand in this space, those are tremendous. There is competition definitely, and some of the listed players need to get their act together as regards competition. They've lost market share. And if they do get feet on the street, get their act together, clearly with some of the brands that these companies own, upsides can be quite material. And going forward, as you rightly mentioned, the growth is going to be value adding because you're going to see premium brands actually being sold more, and that will mean margins will expand. Again, the story remains the same that some of these names have done nothing for 6-7 years, or thereabouts, maybe 4-5 years, or around that time. And if earnings do surprise on the upside, then upsides on the stock can be quite material. So this is an interesting space. There are bottom-up opportunities. And one, if you're a discerning investor, there is money to be made here clearly.
Anshul, another space where you think there is money to be made is the ethanol opportunity. And I think, here you've owned names like Balrampur for a while, but you own other names as well. What's even if you want to talk about this, and is that something you're still buying? Again, stocks here have done quite well. I think that says without saying for most sectors right now. But from here, how long a view would you take for this space?
Prashant, actually, this is a space, when we talk of ethanol, the first thing that comes to mind for most participants in the markets is sugar. And because sugar is a cyclical sector, they try and stay away from this space. But ethanol is a secular growth story in this space. India needs to blend 20% of its petrol with ethanol by 2025, and we're only at about 11%. So we need to double our production by then. And this is only petrol, which is 20% of the overall oil consumption in the country. If we were to start blending diesel, the ethanol will be 4 times what it will be by 2025. So this is a secular growth story, and the sector as a result is becoming far less cyclical as it used to be earlier, and which will also mean that sugar prices will be supported if there is a failed monsoon, even more so. And given the dynamics, this is a space which to us looks very interesting for the long term. Short-term volatility aside, if you're a long-term investor, this is a space which in our judgment, both on the sugar side as also the service provider, maybe capital goods side, this space offers opportunity. And we are quite positive on this space.
Getting back to the opportunities that you see in the small and the mid-cap pharma space, does it also include hospitals broadly? Today, for instance, Aster DM is higher in trade. It's up close to about 12%. There is the much-awaited restructuring where they are planning to sell their Gulf business. Binding bids should be in soon. Once that takes place, money will flow into Aster DM. Maybe shareholders get rewarded. That's a stock higher in trade. We were chatting with Metropolis. Does diagnostic make the cut right now? Because the sense, Amira Shah was indicating was that, they have been able to push through price increases in select tests in the last few months. Competition appears to have eased. Can you throw some light on hospitals and diagnostics?
Yes, Rima, actually hospitals is a very interesting space there is no doubt that that's an interesting space in terms of demand pattern. But what if you look at the numbers over the last 3 to 4 years, you will notice that EBITDA margins have really expanded meaningfully. And along with EBITDA margins, their valuations have also expanded. So companies that used to trade at anywhere from 10 to 15 times enterprise value to EBITDA are now trading at 25 to 30 times. And this is on expanded EBITDA margin. Now, again, when you have this combination, you've got to be slightly cautious because you may be paying premium multiples at premium margin. Now, if margins have room not for upside and they have room for downside, then there is clearly going to be a contraction in multiples. And you don't want to be in that mode which is thinking. So in that sense, one has to be cautious in this space. It has to be a much more stock-by-stock sort of approach rather than a sector-wide approach in the hospital space. As regards the pathology lab space, we have thankfully stayed out of this space in the recent times because, again, our belief was that competition intensity was going up in this space. Multiples were quite extended, and that meant that there was room only for downside, not for material upside. And many of these names have halved and more in the last 1.5 years. Now, when expectations are low and people think that recent uncertainties are going to play through into the future, we think that this is a space which is worth looking at. You may not want to invest immediately, but clearly this is a space where one should be researching given that expectations are low and valuations have eased off. So we will be looking at pathology labs and in hospitals we will be very stock specific rather than sector specific.
Okay. All right. Anshul, we'll leave it there. Thank you very much for your time. It's a pleasure, as always, having you with us here on CNBC TV18.
Thanks,
you indeed.
Prashant. Thank you. Bye-bye.
Thank you. Well, 70 points on the Nifty, 19,400, basically not very far away from the day's highest point. The high is 19,434, so just about 40-45 points away. We'll take a quick break here. We are back. Dealing room check with Nimesh coming up on D Street Chatter, and what to buy or sell today for a reverse trade tomorrow with our technical experts coming up.
Welcome back. Here with us on Closing Bell, and it's time now for our special segment, The Street Chatter. Nimesh is here to tell us what the buzz is like today. Nimesh, so interesting, the market's continuing to move from strength to strength. Every small dip, 20-30 point dip that we're seeing, it's all getting bought into. What's the word out there?
Hi, sir. As you rightly pointed out, we've been moving up higher every day, and I guess with every up move now, the rally is going to get narrower and narrower, and that explains only select stocks in the large caps are doing good. For the last many days, there has been a feedback that the money looks like shifting towards the large caps, and that's clearly playing out. So the mid-cap underperformance continues, and some select large caps is what driving the Nifty upwards. Even in today's trade, the feedback is the flows are positive. Though they are mixed, but the buys is still very positive. And within that, I guess for the second day running, it's the PSU Banks which are well bid. That was the feedback yesterday as well, and in 2 days, the PSU Bank index has rallied more than 5%. So that explains that maybe there is a bit of catch-up happening now within the PSU Bank stocks as well. As I said, the broader market is where there is some bit of profit booking clearly visible now, and it's getting very, very selective from here on. So that something explains the underperformance in the broader markets. But clearly the rally seems to be largely led by large caps, and within that, the flavor of the market clearly seems to be the laggards, and within that, the PSU banks have done really well today.
What about stocks? Which stocks have made the cut today?
Well, in terms of individual names, the first stock on my list today is Delivery. Remember, 2 days back, there was a Bernstein upgrade as well. But the stock has been largely consolidating in a very narrow range. I believe there is a domestic mutual fund who is a large seller in that stock. So, that explains that it's been a range-bound trade. But looks like, that selling could get over in few days. So, that's something to track in Delivery. The second stock is UBL. Again, something completely off the radar for the last many weeks now. Finally, some bit of buying traction seems to be back at some HNI desk. And I believe in UBL, the big trigger is the appointment of the new CEO. So that's something to watch out for going forward. The third stock is AU Small Finance Bank. Within the private bank stocks, this is one stock where I'm told that there could be a last MOC buying in AU Finance at a leading FI desk today. So last half an hour could be quite interesting in AU Small Bank. And the last stock is Adani Ports. Within the Adani Group stock, this is one stock which was largely in a consolidating phase. Looks like a large selling from a leading FI seems to be over now, and at these levels, a domestic mutual fund has turned buyer. So there is there's some bit of accumulation now happening by some domestic funds.
Okay, all right, Nimesh, thanks very much for that. So that's a list that we will watch, and there's always an interesting compilation. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
On the BTST on Jindal Steel Power, that's a stock which has done very well and moved up to the intraday high and as well as swing high. So BTST here with the stop at 600 for targets of 618, and the BTST on Sun Pharma, which was down yesterday, but overall trend is on the positive side. So BTST here with the stop at 1040 for targets of 1070.
Okay, all right, Mitesh, thanks very much for that. Well, there's an IPO open for subscription, and this is an interesting one. It's a gold company, Senco Gold. IPO, sort of, as I said, open today, is the largest organized jewelry retailer in Eastern India, 405 crore rupee IPO. Mangalam is standing by to provide us with the overview. It's got some pretty interesting anchor investors, etc., who come in as well. Mangalam, take it away.
Senco Gold is the leader of the organized jewelry space in the eastern part of the country. It's a 50-year plus brand, fourth generation entrepreneur. The IPO opens today at a price band of 310 to 317 rupees. They're looking to raise around 405 crores, of which 135 crores will be a partial exit from their existing PE partners, SEF partners that is, and 270 crores will be fresh issue which the company will deploy into expanding their store network. The company at the higher end of the price band is seeking a market cap of close to around 2,462 odd crores. A little about the financials of the company. The revenues in FY23 were close to around 4,077 crores, a little above Thangamayil Jewelers, a lot below Kalyan and Titan as well. But their margins at 7.9% or 7.8% put them pretty much in line with Kalyan, a little above Thangamayil and a lot below Titan as well. The net profit of the company has compounded at over 60% in the last 3 years. But remember, this comes on a favorable base as well. So it's important to check where it goes from here on as well. Nearly 70% of their revenues comes in from West Bengal. The company plans to use the funds which is raised to increase its store network, which currently stands at around 136, and also deploy that into marketing expenses to to perhaps increase the share of revenue that it gets from studded, which as of FY23 stood at around 6.8%. The company says it's closer to around 10% right now. What's good about this IPO is the fact that it's offered at 15.5 times trailing valuations, which leaves a lot of value on the table as compared to the peers which trade at extremely higher multiples as well. However, a couple of things we need to watch out for going forward. The working capital, the last couple of years, the company's operating cash flow has been negative, and at the same time, this is now a competitive space. So let's see how the company goes ahead and expands its margins.
Okay, well, Mangalam, thanks very much for that. We'll get you updates in terms of the subscription numbers. Today, of course, is just day one. Jay Bala of cashthechaos.com is now joining us. There is 14 minutes to go for market closing. Jay, pushing through, pushing higher. Are you changing your view?
No, Prashant. No, I've been saying that since 18,500 that the markets are making higher highs, and until the supports are not giving away, the markets are still trading higher. And I outlined a few weeks back that if the markets were to take out the all-time highs, it would do a couple of things. It's already done the first thing that I highlighted. The market would push somewhere close to 19,350. And the markets are trading slightly above that. And the next resistance is about 19,500 and then 19,900. Looking at the markets from the extreme short term, say from a couple of weeks perspective, I would say the markets have still got one more sequence of higher high in the daily time frame, not on the intraday time frame, on the daily time frame. So, but there are some signs within sectors that are showing signs of, cooling off. I would still think that those are pullbacks within the short to medium term uptrend. But the medium to long term is slightly different. When the time is appropriate, we'll talk about it, but that will distract from keeping the focus over the next push higher for the markets.
What about the financials? That's 1/3 of the market. Do you see it as a problem pocket or pushing higher?
Yeah, it's slightly weaker than the broader markets, but as we have highlighted that several weeks ago, the upside for the banking sector is quite limited, but it's still holding up about critical support of about 43,500, 43,400. As long as the index is managing to hold those levels, assume that it's trying to push towards all-time highs. But it is definitely weaker, and the long-term resistance for the financial sectors coming in about 47,000 to 49,000. It's a long-term channel starting from 2004, from the time the banking index was implemented. That is hitting the markets around 47,000. That has put a brakes on the market during the GFC crisis, during 2011, during 2018 to 2019, just before the COVID crisis. So it's a very important resistance line that's coming in about 47,000 to 49,000. Weaker in the short term, but still pushing higher.
Okay, interesting. So we'll watch out for those levels. Still some distance away from that important resistance mark. Jay, hi, good afternoon. Are you noticing anything interesting in the auto patterns? There's a lot going on. I mean, a little bit of profit taking as the monthly sales trickled in. Today, Eicher is down because of news flow, because of competitive pressures. But anything interesting on the charts when you're looking at these frontline auto names?
Yeah, see, from the auto sector as such has been the leader along with FMCG and capital goods. And I had a price projection of about 15,100 for the Nifty Auto Index. It's overshot that by a slight margin. I would still think this is just a cool off, like I highlighted in my opening comments. But as long as the index can manage to hold about 14,525 on a closing basis, I would view this as just a short-term profit taking. But in the event that the auto index were to close below 14,525, I will have to make a reassessment. Because this is a market leader. It has very important bearing on the stock market as well as the economy. Within the auto space, it looks like TVS Motors has made an incomplete move to record highs. So, as long as TVS Motor can stay above 1250, 1280 range, I would still think that it's heading to record highs past 1425 and 1490. But allocate lower because it's in the last stretch of the move. You don't want to be allocating a much higher level. Allocate sensibly.
Jay, do stay on. We need to slip into a break. It's the Nifty expiry, and today banks are selling off, seeing profit booking. Axis Bank down 1 1/3. ICICI Bank was up 1% in the morning, now absolutely flat. Profits are being trimmed off HDFC Bank as well as HDFC Limited. What's pushing higher are the pharmaceutical names. Sun Pharma's climbed 1.6%. Dr. Reddy's giving it company with a rally of 1.9%. So strength in pharma named Cipla is inching up. Apollo Hospitals up nearly 1%. And Hero MotoCorp is surging 4.5% up on Hero MotoCorp. It's a fresh 52-week high on that. We'll get into a break. We'll also come back with the closing rates.
Okay, welcome back. 6 minutes to go for market close. 60 points on the screen on the Nifty 19,385. Jay, of course, is still with us. He's been running us through what he makes of the auto space, financials, the Nifty. But there's one area where you're a bit more cautious right now. You've been cautious, IT services. What's the sort of play here, and specific names which look good or bad in that space?
Yeah, the Nifty IT has been a surprising weak pocket, Prashant, and it still continues to be a weak pocket. One would have thought that the AA mania it would have got some tailwind, but it's not happening. As long as the index stays below 3,300, it's still prone for profit booking. From a slightly higher time frame, it can probably stretch to somewhere to 31,600, but I don't think it has that much legs, because the frontline names, Infosys, TCS, and Wipro to a lesser extent, are still struggling and looking like they can get dragged down. But this is slightly stretching into the mid-cap names which have been strong, and I've been bullish on Persistent, Coforge from last October, that they might see some profit booking here. And in fact, there might be a short-term opportunity, extreme short-term opportunity in Coforge and Birlasoft, if they were to break today's low later on from tomorrow's session to anywhere without breaking the high of the last couple of sessions. If that happens, that will present an extreme short-term trading opportunity, somewhere about 7 to 10% drop for both these stocks. IT remains a weak pocket.
Very quickly, Swelect Engineering, this energy, this is a solar power manufacturing company, not very big. Its market capitalization is 600 crore. It's not done too much this whole year, but today on large volumes, it surged 16%. Take us through the technical setup.
Yeah, it's a very interesting stock. And in fact, before the last few minutes, before it came on the screen, it spiked a little bit. The structure of the stock is pretty similar to the Nifty, briefly breaching the 2022 low for the stock, and then it's bounced back. The high it registered last year, 2022 or 2021, is a little close to 360. And I think that high is going to get 460. I think that's going to get challenged. And the structure is pushing for record highs. And as long as the stock can stay above 310, I think it's going for fresh record highs close to 470 to 500 plus.
Okay, big volumes. Actually, the volumes are some of the highest in more than a year in today's session. And of course, we'll see how this one goes. But Jay's call there. 3 minutes to go for market closing. Jay, good to have you with us here. Thank you very much for your time. Appreciate it here, as always, on CNBC TV18. Speak with you next week. So we're up, we're going to end the 70 points higher, almost at 19,400. And again, one more pretty strong session, notwithstanding the early morning intraday cool-off that we saw. But the cool-off lasted for, just, I think, 10-15 minutes. And then the market started moving right back after 10 in the morning to the day's high at about 130. So the close is a little off the day's high, but I don't think there's very much to complain. Nifty Bank is up about 0.25%. So there was I think actually the Bank Nifty leaves off exactly in the middle of the range. The Nifty PSU Bank Index, at the top gainer, again, big cool off from the day's high though. And of course, financials with the Bajaj twins and the large banks are responsible for bulk of the Nifty gains and the Bank Nifty gains, of course, that we saw in today's trading session. So another, all-time closing high on the Nifty coming through almost at 19,400. Prima.
So the Nifty PSU banking sector was a strong showing, 2% up. The other two sectors which deserve mention, one is IT, closes up with a gain of 1%, and Nifty Pharma pushed higher, ends up nearly 2/3 of a percentage point. In terms of names, you have Tech Mahindra, TCS, Wipro, HCL Tech. The second half of the trading session was very strong for these IT majors. On the pharma side, Sun Pharma, Dr. Reddy's Cipla closing up with gains of more than 2%. In the auto pack, it's a mixed picture. You had MotoCorp closing with a rally of nearly 4.7%, but on the other hand, Eicher Motors went down as the biggest loser. This is one of the biggest intraday losses, one-day losses that we've seen for Eicher Motors, 6% gone. On that, Bharti Airtel struggled in trade. Reliance Jio launched a new phone, Jio Bharat, but the stock after yesterday's 2.5% pop came in for some amount of profit booking.
Well, mid-caps subdued. The index is ending very, very flat. And actually today is one day where declines are outnumbering advancing stocks. Just less than 1,300 advancing stocks, but the declining stocks are almost 1,700. So that's the first trend to note. However, it's been all about financials, whether it's PSU Banks, Tier 2 banks. It's financials literally all the way if you talk about the gainers. So stocks like PNB, 6.5%, JNK Bank, 6%, Poonawalla Finance, 5%, and it's a long list. Bank of India, IOB, Yes Bank, can just go on and on. Federal, Central Bank of India. You take a dart and hit it on the board, and chances are on the gainer side, it'll hit a financial stock. It's been that kind of a day. In addition, some stocks like Aster DM had a great show, 16% up on that one. That really, really stood out. And then the newsmakers of the day are the IDFC twins. IDFC saw gains. IDFC First Bank was down 4%. The market believes the way the swap ratio is structured, it favors more IDFC than IDFC First Bank. So those were some of the stocks in news. There's a smaller mid-cap name called Genus Power. Announced order wins of about 2,200 crores, and the market was lapping it up 9% up on Genus Power as we're closing out. So quieter day for mid caps, a lot of profit taking as well on stocks that have run up in the recent past.
And even quieter in the US because US is shut, right?
4th of July.
No trading action when we come back. So a clueless kind of market in the morning, especially from a global perspective. But it's been a good one. Another record high for the Nifty. It's a wrap on this edition of Closing Bell from all of us here. Thank you very much for watching, but don't go anywhere. Our Tuesday special, Commodity Champions, is coming up next. Stay with us.